Hey everybody, I hope everyone is doing well and had a good day. And in this video, I will review the Emini 5-minute chart for Wednesday, August 20th, 2025. And I want to start by going back and looking at yesterday and really thinking about how yesterday unfolded. Because yesterday reminded me, yesterday's the type of trend that's kind of like a freight train or an aircraft carrier. It's one of those trends that have a lot of momentum and inertia, and it takes a lot to stop that kind of a trend. A couple of weeks ago, I was in Maine, and just outside the harbor, there was a U.S. Navy ship. It was the USS San Antonio, and it's just this massive ship. And I couldn't help but think about how Brad used to talk about that in his reviews. He would say, a trend like this, these small pullback type of trends, they're so tight, they have so much momentum. You need a real strong trendline break to really stop them. And it's kind of like how those types of ships or freight trains are just so massive. It takes a lot to finally grind to a halt. And I'm bringing that up because this trading range at the end of yesterday was not that strong trendline break that is needed to bring a trend like this to a halt. In other words, this is a breakout on a higher time frame, and it's probably going to get a second leg down. And this might just be a sideways pullback, maybe a low 2, low 1, low 2. Also, just quickly on the daily chart, I kind of talked about how you get these sideways moves far above the moving average, and at some point the bulls stop buying because they're buying far above the average price, and they're buying momentum. And when the market goes sideways for enough bars, there's no longer that argument or premise that there's momentum. So the bulls stop buying, they look to buy lower, and the bears are selling, and the market can snap back to the moving average. We saw it happen back here. So I thought we'd at least go a little bit below yesterday's low and reach the daily moving average. I didn't know we'd go this far, but I did think we'd go at least a little bit below. So I do have yesterday's low drawn in blue on this chart. And I'm going to go as far as I can, bar by bar, but my time is limited today. So with all of this in mind, we know we need a strong trendline break to reverse the trend. Otherwise, it's still probably always in short trading range here, but the trend that preceded the trading range still has an influence on the probable breakout direction of the trading range. So in other words, this trading range is probably a bear flag until the bulls do something impressive to disappoint the bears. Right on the open, we had a 3-bar micro channel. And because of the context, the bars to the left, we are in a bear trend, and then we had a 3-bar micro channel going into the day. We do have a possible trend from the open, and bar 1 is a candidate for the high of the day. At this point in the day, bar 3 is breaking out below all the bars to the left, and it's probably going to get a second leg down. And there's really nothing to buy for the bulls. The bulls, maybe they buy at yesterday's low. They're buying at the bottom of the trading range, what they hope is a trading range. But if you bought with a limit order at yesterday's low on bar 1, your entry bar, not very good. And then you're disappointed with the following bar, bar 2, you're at break even. And then bar 3, breaking out further to the downside. So the bulls really are lacking buying pressure, and most micro channels get a second leg. So at a minimum, I'm expecting the first reversal at this point to be minor and for the bears to get a second leg down. And because of that, the bulls might wait for that second leg before they look to buy again. So it's always in short, probably sell the close and sell a pullback on bar 3. And then bar 4, a good bar for the bears, not very climactic, sustained selling. However, bar 5 was a problem for the bears. Bar 5 was a little bit too big. And it's really a very huge bar. It's the biggest bar on the chart. It's really, if you think about on the smaller time frames, that there's a channel. So on the lower time frame, the market's channeling, and we're getting a breakout below a bear channel line. And it's parabolic in nature, it's unsustainable. What happens is the risk gets too big for the bears, and they're forced to take profits. They're forced to reduce their risk, and one way to do that is to reduce their position size, take profits. So that's going to limit the amount of bears selling on the close of bar 5. Bar 5 is kind of a gift bar, the way I think of it. If you're a bear, you get this huge bar in your direction, and it's a gift. It's a windfall of profits in a 5-minute bar. And a lot of traders will take profits on the close of that bar and then wait to see what happens. Big bars like that usually result in 1 to 3 bars of sideways price action. And in this kind of environment, probably trend resumption. Bar 5 being a gift bar, it's a buy the close bar to take profits, but it's not a bar to buy to go long. There's not enough buying pressure. So really, it's okay to stay short, but the expectation here is at least some kind of hesitation. And we got that hesitation on 6. 6 is obviously a bad stop order buy, so probably sellers above, high probability, sell above the bar. And 7 triggered that stop order. This was a couple of bars sideways. After the sell climax, the bears will probably get at least one more leg down. But 5 is a problem again for the bears in the fact that trends that last all day usually do not have these big bear bars. Just look at yesterday. This giant bar doesn't exist. And anytime it did get really steep, we had to correct for several legs. But through here, this is sustained selling. This is good price action for the bears. This is problematic because it attracts profit taking because the risk gets so big. But nothing to buy, so still always in short. We're on the sell above 6. And we get follow through bear breakout on 8. 8 probably sell the close and sell a pullback. One option is the breakout point, bar 6 low, broke out below, probably resistance at that level. And minor reversal attempt, 9 and 10, probably a minor reversal. 10, it's a reversal bar, but it's mostly a doji, very small bull body. It's a low probability buy. If you're buying, you need to make several times your risk to make the trade worthwhile. Similar to bar 6, so there's probably more sellers above bar 10, and it's more likely we will go to a new low before we reach a measured move up of bar 10. Plus we have that breakout point, resistance for the bulls to get through, and this looks like a minor reversal. Where are the strong bull bars and consecutive strong bull bars? They don't exist. We're staying below the high of bar 8, so this is not really it's not a very problematic trendline break. It's a trendline break, but it's minor. And then strong trend resumption on 12. But we are in the channel phase at this point. We pulled back. As soon as the market pulls back, the breakout phase is over. So there's a breakout, spike down to bar 6. We pull back on 7. Now at that instant, either the market has entered a channel phase or a reversal is underway. But the reversal argument is obviously lower probability. So we're probably in a channel, which means bears switch from selling momentum or selling for any reason to being more efficient and selling pullbacks and taking profits at new lows. So probably sellers above 6, but then buyers at a new low. and you can see the reaction at the new low, profit taking, and then sellers above again. And that's how channels are formed, and the process repeats. But now we have 1, 2, possibly a third leg down on 12. And I mentioned before, it's not really as important to count legs in the with trend direction. When you have a major trend, you don't really want to count the legs, but it's still important to count when you're in a channel, because after 3 legs, you expect at least a minor reversal. And especially when you have such a climactic bar, like bar 5, it's a warning that the trend may not last all day. So 1, 2, 3, the third leg subdivides into 2 legs of its own. And so the expectation is a minor reversal here. So 18, reasonable bar to exit shorts above 18, bull bar closing on its high after 3 pushes down. You may test the start of the third leg. So we may get back up here. We might even get back up here. The channel is tight, so at this point it's unlikely. It's unlikely we get a major reversal. 18 is not likely to be the start of a big bull trend, but it's enough because of the context, 3 legs down, bull bar closing on its high. It's reason enough to exit shorts above it. And then consecutive bars, 19, another bar, bears can exit above it. But as far as buying, it's definitely aggressive. There are targets above. Minor reversal is expected, but the upside is probably limited. But then we got the surprise on bar 20. 3-bar micro channel, definitely strong enough for a second leg up. So probably buyers below. It might be by the close, but this sell-off is still strong enough. We probably need to retest the lows. And we got more follow-through buying. So this was a big surprise by the bulls in a very strong trendline break. Bear trend, but a very strong trendline break with big consecutive bull bars crossing the moving average. Every bar closing on its high, closing above the high of the prior bar. This is a very strong breakout for the bulls. And at this point, the channel has evolved into a trading range. So the start of the channel, the bar 7 high, the market already tested it here on bar 23. And the bulls are likely to get a second leg up. So any reversal attempt here, or trend resumption attempt by the bears, is probably going to be minor, because we've now gone above the major lower highs. So at this point, the market is either in a bull trend or a trading range, but the bear trend is over. So like I said, very strong rally. The odds are there are buyers below, and a second leg up is very likely. And I'm running out of time here, so I'm just going to speed it up. What happened here? Maybe a 4 or 5 bar micro channel. Why didn't the bears get a second leg? Because it's a higher low after a really strong rally. It might be about a 50% pullback. So this is trapping traders into selling too low. You get this big bear bar, but bad follow through. You're at the 50% pullback. It's very likely the bulls are going to get a second leg. So entering here is reasonable for the bulls. Probably a 60% chance we test the highs before running the stops down here. And that's exactly what we did. The buyers came in and we tested the prior high. Now we might be in a channel phase. We have the breakout, we pulled back. Now we're going above the high, where there's probably going to be profit taking by the bulls. So the upside here might be limited as bulls take profits and look to buy pullbacks instead. And we're getting a correction, maybe a 2-legged correction. Reasonable to buy above a bull bar like 43, looking for a test of the highs. But the stop does not go below 42. That's a skunk stop. Ideally, your stop is below 30. You never want that stop to get run, but using the wide stop, at least you're using the correct stop. Getting range compression here. higher lows and lower highs. It's a triangle. This breakout will probably get, the bull breakout will probably get a second leg. This tight channel did get an attempt at a second leg, but 45 is a low one at support. And we found buyers below. 46 is another reasonable stop order buy above the bar. And then a low two, but another low two at support. Probably buyers below 47. Bad entry bar. And then finally the bull breakout 49. Upside might be limited as we test resistance. And the market is in a channel. So again, upside here might be limited. The nature of the day, it's a trading range day. Big down, big up. It's unlikely that this breaks out into a very strong bull trend. And the later we get in the channel, leg 1, leg 2, leg 3, probably going to find a reversal before very long, and the market will evolve into a trading range. So maybe the channel line is drawn this way, and the market's evolving into that trading range. And there's the bear breakout 55, deeper pullback. But this entire sequence down here and here, this might be leg 1, complex pullback, second leg trap. It's a double bottom. If 55 doesn't get good follow through, it might just be a sell vacuum testing support. There's also the bad buy signal bar on 30. We kind of talked about it earlier. Really, this bear breakout should have had a second leg down and retested the lows, but it didn't. And now maybe we'll retest it over here. But because of this rally, this becomes support. So the downside here might be limited. 55 got bad follow through, but probably sellers above 56, second leg down, likely. And then a more reasonable second reversal, 59 at support. So there's a stop order buy on 59. If you're short, exit above 59, and bulls can buy to go long. Bad low 1, buy below by the close on 60, 3-bar micro channel, might be by the close by a pullback. And the bulls getting their reversal back up. But trading range at this point, so breakout gaps close, and then we're probably going to remain somewhere within this range. It still might be a channel, so we might go a little higher, but the upside is still probably limited. Reversal attempt, but strong micro channel. First reversal should be minor. Buyers below, buyers at the moving average. Second leg up, likely. And then the bulls got their second leg. Reasonable to take profits at a new high. Reasonable to look to take profits at yesterday's low as well. Probably resistance. We broke far below it, and it's probably resistance at this point. Trying to break above, but finding resistance at the channel line and yesterday's low. It's also too late in the day to trade. Second reversal makes more sense here, 74. A reasonable second entry short. Okay to exit longs below and okay to sell with a stop. There's room to the moving average for at least a scalp. But the sell never triggered. And again, too late in the day to be trading. 1, 2, 3 pushes up, 76. Might be a sell to close bar for at least a scalp to test these lows where this channel evolves into a trading range, but it's very minor. Okay, that's all the time I have for today. I really appreciate everybody for watching, and I hope everyone has a great night.